Worries about the stability of the banking system have spread from the US to Europe. Shares in Credit Suisse fell to a record low after its biggest shareholder, Saudi National Bank, ruled out a new cash infusion. The lender has appealed to the Swiss National Bank for a public show of support. Concerns have been growing about the bank's liquidity on both sides of the Atlantic following the collapse of Silicon Valley Bank in the US a week ago. Now, for more on this, I'm joined by Octavio Marenzi. He's CEO of consultancy OPMS. Mr. Marenzi, Credit Suisse has asked Switzerland's National Bank for a statement of support, confirming it is financially healthy. Do you expect it will have to provide more than just reassurance, financial support maybe?
Oh, I do expect they're going to have to actually put some money on the table, that simply making these pronouncements is not going to be enough. I mean, Credit Suisse is under severe attack. People are pulling out money out of Credit Suisse at a furious rate, and Credit Suisse is simply not going to be able to pay those depositors. So someone's going to have to close that gap, and it looks like the Swiss National Bank is going to have to step into the fray and actually put some cash on the table rather than simply having pronouncements about moral support for Credit Suisse.
What would the impact of such a bailout be on the European market if a Swiss bank out of all countries would have to be bailed out?
Well, I think for the Swiss financial market centre, it's going to be an absolute catastrophe, and I think it has been already. So people have put their money into Switzerland in large amounts in the private banking and wealth management spaces and asset management, in large part because Switzerland has this idea of stability and conservative investment of your assets and capital preservation. And that's the kind of clients that Swiss banks have attracted. That's all now put into question with Credit Suisse. Credit Suisse has done incalculable damage to Switzerland's reputation as a financial centre. And I think the Swiss National Bank and the Swiss government are fully aware of that and want to make sure that this doesn't go any further.
Now, this is all happening, of course, in the context of two bank collapses that we've seen happening in the US this past week. And how far is this related to what happened to SVB, for example?
Well, I don't think there's any direct connection between Credit Suisse and SVB. I don't think Credit Suisse had a big exposure to Silicon Valley Bank at all. I don't think the Swiss bank had large deposits with SVB. So it's not a direct connection. But I think what's happening overall is that we're seeing an environment where we've had very, very low interest rates for a very extended period of time. And that's true in the US and it's true in Europe as well. In Switzerland, a bit less. The SNB is a bit more careful in terms of its management of the Swiss currency. But overall, we've seen very, very low interest rates for a long time. And now suddenly we've seen interest rates rise very, very quickly, particularly in the US. And that is going to break some things. That's going to break some banks who are very dependent on interest rates. It's a very core part of their production process. And as you see big changes in that, some banks are not going to be able to keep up. Compounded with that, I think Credit Suisse has done some whole bunch of damage to itself outside of anything that SVB has done, or anything related to SVB. So there's been some monumental missteps at Credit Suisse in terms of risk management, in terms of investments, and that's coming back to haunt the bank now.
You mentioned the interest rate aspect in the story here now. The ECB is expected to increase interest rates again tomorrow. Analysts expect 0.5 percentage point increase. Do you think that today's events might factor into the ECB's considerations for tomorrow?
Definitely. I don't think the ECB wants to give the impression that they're panicking and responding to the latest news and by the minute making decisions about where to put interest rates. So I think they want to convey a sort of a sense of greater stability that and thought about how they are going to approach interest rates. That being said, there's going to be tremendous pressure on them now, on the ECB and on the Fed, who are both making decisions this week about interest rates, to not continue with these big increases in interest rates, because there has to be some losses involved in that. Basically, anyone who's sitting on bonds, a bond portfolio, or a loan portfolio like banks are, is going to have to take losses as a result of these increases. So the banking industry is screaming out for the central banks not to continue with these increases. The central banks, on the other hand, have to still fight inflation. And the only way they can do that is by continuing to increase interest rates. So the central banks, the ECB and the Fed included, are in a very, very difficult bind right now.
Difficult times for central banks. Thank you, Octavio Morenzi.
Continuing the conversation into the crisis now gripping everyone's attention here, the statement out of Swiss regulators just a little while ago, basically about the potential, if necessary, the key quote there, to provide liquidity backstop to Credit Suisse. Sally Bakewell joining us right now. She leads Bloomberg's U.S. finance coverage, here to talk, of course, about the second largest Swiss bank. But let's start on the broad strokes here, because we're talking about a statement by the main regulators over there in Switzerland saying that based on Basel requirements, Credit Suisse meets those minimum requirements, and if Credit Suisse needs the liquidity, they're there to provide it.
Yes, I think this comes amid a really bad sentiment for banking at the moment. Don't forget, we've had the collapse of 3 banks, and of course, while for completely different reasons and very sort of isolated and particular to those banks, the sentiment has probably taken a bit of a hit because of this. And Credit Suisse, it's been struggling for a long time. It's been hit by scandals, by leadership changes, by huge losses, and then exacerbating all of that just as it's trying to turn itself around. Its biggest shareholder says that it is not interested in increasing its stake.
So now the big question is, how big is the damage potentially from Credit Suisse continuing to go down this path of erosion? And you've been reporting, Bloomberg has been reporting, that a lot of the big U.S. banks have known about this and have been making moves to protect themselves.
Yeah, that's right. It's possibly a positive sign that some of the biggest banks like JP Morgan, Citi, and Bank of America, they've all kind of been whittling down their exposure, their direct exposure to Credit Suisse over recent months. We saw the shares plummet to a record low. We saw some of its bonds kind of signal almost distressed levels. But again, it's sort of the big question of how much is sentiment and how much is really a key serious issue, given that we now know the SNB says it will provide a backstop if needed. So I think the next few hours and how the bank responds and what it comes out and says will be key. We already saw some headlines this morning with the CEO saying, their liquidity is strong and that the bank is still on solid ground.